Welcome to my channel. I'm Scott, and in this video I'm going to walk you through a process of valuing Coinbase's stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 36 billion market cap. They're trading at $152 a share, and they have 239 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow looked great in 2020, $3 billion, and then it tripled to $10.6 billion in 2021. Then a negative in 2022, and they squeaked out a small positive in the trailing 12 months. Pretty volatile. Net income is the profit or loss on the income statement. It's revenue minus expenses. Same trend, a real big growth from 2020 to 2021, but negative after that. Revenue is the sales for the company, and that shot up from 1.3 billion to 7.8 billion, but then more than cut in half to 3.2 billion, down again to 2.8 billion. But the stock has gone up so much in the past year. I guess investors are looking towards the future, not the past. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 40 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $36 billion. We divide that by 239 million shares. And we get a calculated stock price of 152. They're trading at 152, so they're trading at intrinsic value. It's amazing how close my model came to their stock price. The last time I did a video on them was in May 2022, so about 20 or so months ago. And they were trading at $71. I had them at 97. So they blew way past that 97. There are 13 companies in the same industry as Coin, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. So most companies in this industry don't spend much in CapEx. ICE spends the most at $483 million. They do have a good debt to equity ratio, 0.5. For every dollar of equity, they have 50 cents of debt. The average is 1.1. Pretty much all companies in this industry pay a dividend. They do not. CME is the biggest at 4.2%. That stands for Chicago Mercantile Exchange. They don't generate much free cash flow, a lot lower than the median average. They rank 6th in market cap. SPGI is first at 140 billion. Their price to book is between the median and average. Price to book is stock price over book value per share, or market cap over equity. We can't look at that PE since they have negative earnings. PE is stock price over earnings per share, or market cap over net income. A really weak price to free cash flow. Investors are paying $308 for $1 free cash flow. That's stock price over free cash flow per share, or market cap over free cash flow. Price to sales is a lot worse than the median average, 13. That's stock price over sales per share. Their revenue is equal to the median. They're right in the middle. And we can't look at their 5-year annual revenue growth rate. They haven't been public that long. Morningstar is the biggest at 15%. The average is 9%. Let's take a look at their most recent 10Q. This is as of the third quarter 2023. We'll start off with their income statement. For the third quarter, revenue of $670 million compared to $590 million last year. So it is up year over year. But for the trailing 9 months, they had revenue of $2.2 billion. The same period in 2022 was $2.6 billion. So that is down. Of the $674 million of revenue, $600 million in the US, $71 million in the rest of the world. Of that $71 million, no other country accounted for more than 10% of total revenue. Unfortunately, revenue is down in the rest of the world. It was $88 million last year, but it's up a lot in the US, $500 million to $600 million. Here's a further breakdown of their revenue. Of the $674 million, $288 million is from transactions. Consumers make up $274 million, institutions $14 million. That is down from last year in both categories. But subscriptions and services is up a lot. Stable coin revenue, $172 million, up from $77 million. Stable coin is cryptocurrency pegged to another currency like the US dollar. They mention it right here. We derive stablecoin revenue from our arrangement with the issuer of USDC. So USDC is pegged to the US dollar, so it's stable. It tracks the US dollar. But it's a cryptocurrency. which makes it different than the US dollar. They earned $74 million from blockchain rewards, $39 million from interest income, $16 million from custodial fees, and other subscriptions and services, $32 million. So the big winner is stablecoin. That's why their revenue went up. Their revenue went up $100 million in stablecoin, but the total revenue growth was $84 million. So revenue was down outside of stablecoin. I like this income statement better. It shows percentages. Here's a breakdown of their expenses. Transaction expenses, $91 million. That's 13%. This is the percent of revenue. So 91 million over 674 million is 13%. Technology is their biggest expense, 322 million, nearly half their revenue. Sales and marketing, 78 million, and G&A, 250 million. But G&A and technology have gone down a lot as a percent of revenue. Last year, technology was 94% of their revenue. So total operating expenses, 750 million, which is 112% of their revenue, a big improvement from last year from 190%. They're becoming more efficient. They had an operating loss of 79 million compared to a loss of 550 million last year. But this negative 135 million in other is actually a gain. You see in parentheses, it says income. Other income is negative and expense is positive. So they almost had a net profit. It was a small net loss of 2.3 million. Let's see if we can figure out what this gain is. They had a gain on strategic investments. So maybe they sold one of their business lines. And they had a gain of 82 million on the extinguishment of debt. So probably interest rates moved in their favor when they got rid of this debt. It also looks good in the trailing 9 months. They had a net loss of 179 million. Last year was a net loss of 2.1 billion because their expenses were really high last year. For the first 9 months of 2022, 4.7 billion of expenses. They cut that in half to 2.4 billion. And this shows you their shares outstanding. It went up a little bit from 224 million to 237 million. Let's look at their balance sheet. Current assets of 124 billion. Current liabilities of 118 billion. So their current ratio is above 1. They operate similar to a bank because they do hold a lot of funds. That's why their balance sheet is so big. They have 114 billion of crypto assets they're safeguarding, they're holding for their customers. And you see a similar liability on their balance sheet, 114 billion. Because they can't record that asset as if they own it. They raised 4.4 billion from selling their business. They profited 1.5 billion from running their business. I didn't think they'd have positive retained earnings, but they do. Retained earnings is a sum of all their prior net incomes. So it's how profitable the company is historically. Let's look at the statement of cash flows. The first section is operating cash flow. You start out with your net loss, 179 million. You add or subtract the non-cash items on the income statement. Then you adjust for changes in working capital. So they actually had positive operating cash flow of 928 million. Last year they had an operating loss of 839 million. So that's a good sign. There's a lot going on in their investing section because it shows you the assets pledged as collateral, the purchase of the crypto assets that they hold. Of course, business acquisitions. They spent 31 million from acquiring other companies. Last year was 186 million. They don't purchase much PP&E, a little more than $500,000. They do have a lot of software development costs. That is a capitalized asset, similar to PP&E. That was 52 million. And they had a cash outflow of 1.7 billion in their financing section. Last year was 4.2 billion. Here's their stock price historically, and this is in candlestick format. So the first month they traded was April 2021. It's a red candlestick, so the stock price went down. It opened at 381. It has a high wick, as you can see here. It got up to 430 in its first month, but it closed the month at 298. The following month was also bearish. It opened here, closed here. A small positive in the third month, and then you could see the bears took over. In November 2021 until June 2022, it pretty much only went down. But these bars on the bottom are the trading volume. You could see how much trading volume went up in these months. But there could be a ton of trading volume and the stock goes down. There could be a ton of trading volume and the stock goes up. But the stock is up a lot, over 200% the past year. You can see November 2023, that's a really strong month. It opened at 77, closed at 125. It went up 62% in that month alone. The following month, it went up 39%. It opened at 126, closed at 173. So far, it's down 9% in January. Let's take a look at the stock on Simply Wall Street. Its last price, $152, 36 billion market cap, down 18% in the past week, up 354% in the past year. Wow, it's up more than I thought. Let's see what they say about the company. Coinbase provides financial infrastructure and technology for the crypto economy in the US and internationally. They offer financial accounts for consumers, a marketplace with a pool of liquidity for transacting crypto assets for institutions, and technology and services that enable developers to build crypto-based applications and securely accept crypto assets as payment. So if you're a business and you want to accept crypto, you can go through Coinbase. Founded in 2012, 12 years ago, based in Wilmington, Delaware. This must be wrong. They value the company at $1. 22 analysts priced this stock at $105. Here's their revenue since 2019. It was $500 million. In 2020, it rose to $1.3 billion. It ballooned to $7.8 billion in 2021. This is their letter to shareholders. Net revenue in Q4 was $2.5 billion. $2.3 billion of that was transaction revenue. So in the fourth quarter of 2021, their revenue was higher than the first 3 quarters of 2023. They say retail transaction revenue in Q4 was $2.2 billion, up 114% compared to Q3. The reason for the big boost in revenue was all-time high crypto prices and high volatility. This is the price of Bitcoin the last 5 years. So it did peak in the fourth quarter of 2021. It got close to 66,000. So the higher the price of Bitcoin, the more money this company makes. And Bitcoin is up about 150% in the past year. But revenue dropped a lot in 2022 to $3.1 billion. It's currently $2.7 billion. The forecast is for revenue to be flat over the next few years, $2.7 billion by 2026. The CEO's salary is $1 million, total compensation $7.5 million. His tenure as CEO is 12 years. Only one insider trade in the past year, a buy for 810,000 shares. 41% of the company is held by institutions, 39% by the general public, and 20% by insiders. The biggest shareholder is CEO at 15%. Next is Vanguard. ARK owns 4.4%. Fidelity 1.2%. Morgan Stanley 0.5%. Citadel 0.4%. Their employee count has gone up a lot over the years. It was 1,000 in 2020, 4,500 at the end of 2022. The ticker trades in lots of places: the Nasdaq, Wiener Börse, Bern, Deutsche Börse, Zicha, Bulgaria, Borsa Italiana, Mexican Bolsa, Sao Paulo Bolsa, and Buenos Aires. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.